Good morning and welcome to our Saturday webinars on understanding investment markets and investment options. I'm Sujata from Happy Investor, and we welcome you to our this Saturday's session, where we will be sharing some nuggets in terms of how you look at a mutual fund. We're still getting in a few people who registered for the session, so we'll wait for 2 minutes before we can start. I will take you through the basics of the presentation. And then at the end, we can have a question and answer session. So you could make a note of whatever questions you have, and we will answer that at the end. Okay, so we shall start our Saturday morning session today, and welcome to our quick half-an-hour catch-up that we do every Saturday. Today we're here with a little bit of interesting information on how you understand what happens with your mutual fund investment. We've all heard mutual fund investments are subject to market risks. Please read information document carefully before investing. But once you start investing, what happens? Do we really know what happens within the black box of the mutual fund? Small details today, and I hope I'll be able to give you a little perspective on what happens with the numbers that are handled with your investment. So how to read a mutual fund fact sheet is what we are presenting today. So where does your mutual fund invest your money? Like all of us, there was a Mr. Akash Kumar who's been investing in mutual funds since the last few years. He has always wondered where does the mutual fund he invests in put his money. He has seen many emails in his mailbox saying monthly fact sheet or monthly disclosure from a mutual fund. But he has never opened this email and never looked at the contents. Does this sound familiar to all of us as mutual fund investors? Have we ever looked into this? Have you ever had the same question in mind? Let's answer this for you. So what is that monthly disclosure or fact sheet that is sent across to you? What does it actually mean? I have a picture on the right. This has been taken out from the fact sheet of one of the mutual fund companies. It's the Axis Large Cap Fund. This is just incidental that I am presenting an Axis Large Cap Fund. We haven't masked it because we want to show it as authentic as possible. There's no other agenda on this other than the fact that we'd like to show you what it actually depicts. So what does a monthly fact sheet talk about? It's like a monthly report card for your mutual fund. It gives the characteristics of the scheme. It talks about what the scheme does. It gives you an update on the current status of the scheme. It tells you where it's going. It gives you the various options you have within that scheme. It also gives you the various terms and conditions of investing in that particular scheme. What's okay, what's not okay, and what you can and cannot. And it also shares the performance of the scheme over specific time period. Now, all of this is there in this one sheet. But of course, having a look at it like this is difficult. So we have broken down this into smaller sections in the following pages. Complete picture shared here on this page is just to show you how it actually appears. So let's go further and understand better. So it shares, like I said, it shares the characteristics and the current status of the fund. So what does this talk about? It says it's a large cap, it's Axis Large Cap Fund. This is a fact sheet of July 2025. So typically a fact sheet is published every month in the first week of the following month. So this has been published in the first week of August or second week of August and has data by end of July. So this is described as an open-ended equity scheme that predominantly invests in a large cap stock. So when we say large cap stock, it means the top 100 companies in the Indian market ranked according to size. This also says that Axis Large Cap Fund today was formerly known as Axis Blue Chip Fund. So if the fund name changes, then one needs to understand that there's been a change and that needs to be shown. So what's the investment objective of this fund? It says the investment objective of this fund is to provide long-term growth in capital appreciation by investing in a diversified equity portfolio consisting of equity and equity-related securities of large cap companies in the Indian market. Of course, it also says that there is no assurance that the objective of the scheme will be met. This is a standard disclosure made by all. And it gives you the current status of the fund. It says when it started. It gives you what is its comparison benchmark. It gives you what is the value of money that it is handling on a monthly basis. So Axis Large Cap Fund handles 33,000 crores on an average every month. Then these are some statistical measures that are used to evaluate the performance of a mutual fund. So it gives you the standard deviation of the performance, it gives you the beta, and it gives you the Sharpe ratio. These are various risk-related measures that are evaluated to understand the performance of the fund. Then it gives you what is the market cap exposure. So like we said, this is a large cap fund. So it has 93% in large cap companies, some exposure to mid cap, nothing in the small cap, and some amount in cash reserve. And this is a statutory 5% that a fund has to maintain, because on a daily basis, there could be people who are putting in money as well as removing. So they have to be able to pay out the money that comes as a redemption request. They have to honor it. And then it gives you the details of the fund manager, who are the people who are managing the fund, and since when are they managing this fund, and a brief detail on their work experience in this industry. It also gives you a portfolio turnover measure. Basically means how long does it take for the fund to change its equities in the portfolio. So these are some basic measures that one needs to understand the characteristics of the fund. Then we come down to where does the money that you invest in this fund go? So this gives you the sector allocation. We all know that in India, in the economic sector, we have different sectors. We have banks, we have financial companies, we have consumer goods, we have consumer durables, consumer staples, we have healthcare, we have IT, we have automobile, oil and gas. So this shows what is the distribution across these various industry categories in every 100 rupees that this fund receives. So out of 100 rupees, about 30 rupees goes into financial service. This is the orange that pertains to the 30%. So basically, this shows that money that comes in does not go into one basket. It goes into multiple baskets and in different measures. That was where the sector is. Now, within that sector, there will be multiple companies that the fund will invest in. So we saw 31% there in financial sector. So now if you look at that, then HDFC Bank, ICICI Bank, all of these become a part of that finance allocation. But if you look at the right side and you look at the percentage of exposure that each of these equities has, it means that every 100 rupees that is invested in this fund, about 10% is in HDFC Bank equities, another 9.25% is in ICICI Bank equities, 6% is with Reliance, is holding Reliance Industries, 5% is holding Bharti Airtel. What does this tell us? It tells us that a large cap fund can hold multiple equities, but in the distribution, it cannot have exposure of more than 10% to any specific equity shares of one company. This is an industry-wide rule that the regulator has put across all diversified equity funds like large cap, mid cap, small cap, multi cap, flexi cap. All these cannot have more than 10% invested in a single company. This is the big advantage that you get when you invest through mutual fund. When you hold a DMAT portfolio, you might have 20 equities in your portfolio, and 20% of your entire equities could be in that one company. If that goes down 10%, 20% of your portfolio goes down by 10%. But here, when any one particular company goes down, your risk is only to the percentage exposure to that particular company. So can you see the list of equities here? We have about 20, 30 here. We have about another 20, 30 here. So you have exposure to almost 50 to 60 different companies by investing in a diversified equity fund. And yes, amount kept in cash and debt, which is basically liquid enough to honor any kind of redemptions that come. So the fund holds 33,000 crores. Somebody might on a particular day want to withdraw 50 lakhs. The mutual fund should be able to honor that commitment because these are typically guaranteed liquid investments. Therefore, that kind of liquidity has to be maintained. Then we come to a section which talks about the performance of the fund. What are the different options that you have in the fund and what are the terms and conditions? So when you look at the performance, this first box shows you the performance. It shows you what was the performance of the fund in 1 year, in 3 years, in 5 years, and since it started. This is typically how it is given. And what can you see here? You can see the annual growth rate over different time periods. And it can give you the current value of a 10,000 rupees that was invested a year ago, a 10,000 rupees invested 3 years ago, a 10,000 rupees invested 5 years ago, and a 10,000 rupees invested since the fund started. For this particular fund, it was 2010. It gives you how it compares the performance of its particular plan and how it compares to the benchmark that this fund had. And an additional benchmark which they give you is possibly another index of the market. So you can compare how this fund did vis-a-vis the benchmark and an additional benchmark. So this allows you to understand how this particular scheme has been performing with respect to the broader market performance. Then we come down to the option within the scheme. So within the scheme, basically there's a regular plan and there is a direct plan. The difference between this is when you invest through a mutual fund distributor, it gets invested in a direct plan. When you invest as a direct investor, it gets invested in a direct plan. Within this, you have a growth option and you have a dividend option. So these are the growth options, what we saw here, the growth option direct and growth option regular. And here it's given you the dividend option where the fund pays out a certain amount of dividend in different intervals whenever there is a plan to pay that. Then you have the terms and conditions of the fund. It talks about entry load and exit. So this fund says there is no entry load. There is an exit load only if redeemed or moved out from one basket to another basket within the first 12 months from the date to when you added that money. So if you added 10,000 rupees today, then that 10,000 rupees needs to stay invested for the next 12 months before you move it out so that you don't have any exit. For anything that's moved out before 12 months, it's there that 1% exit load. Then we need to understand what is the risk level of this fund. So this is another metric that is declared. So Access Large Cap Fund is an open-ended equity fund investing in large cap stocks. It has a benchmark. What is this product suitable for? This product is suitable for someone who's looking for capital appreciation over a long term. So anybody wanting to put money in the short term shouldn't look at this. The investment is in a diversified portfolio of equity and equity related instruments of large companies. And investors should consult their financial advisor if in doubt to understand whether this product is suitable for them. And then it gives you a riskometer to understand what is the risk. So this scheme is a very high risk compared to a high, moderate, or a low risk. Now, when we mean high risk, what does it actually mean? It means that over a short period of time, the value of this fund could go down. It could be volatile, but over a longer period of time, you will still get the perceived growth. Like for example, this is the movement of the index. So this is similar to the index in terms of risk. And if you see here, the index moved from here to here in 6 years. But between 2008 and 2010, the index went down. So this shows that temporarily the value of this fund went down. Again, it went up, again, it went down, again, it went up, went down, went up, went down, went up, went down, up and down, up and down. But if you look at a long-term perspective of 20 years, it started over here and has ended up over here. So the risk is only in the intermittent period. So if you invested over here and you wanted to take out the money here, then you ran a risk of losing. But like they said, this is meant for long-term growth. So you should not be looking at putting money in the short term and expecting returns. But when you keep investing for the long term, you eventually get the higher return. So this is meant for a high risk investment, but in the long term, that risk gets adjusted, you get a better return. So this is part of the fact sheet to show you that this is a risky investment in the short term. So these are the basic elements of a fact sheet. So if we come back to the first page, I explained the characteristics, I explained the current status, I explained the sectoral distribution, I gave you the breakup of the various equities the fund holds, the performance of the fund, the options that you have, the entry and exit load, and I also showed you the risk meter. So these are the basic elements of a fact sheet where it gives you an understanding of the fund that you are investing in. Now, why are we coming up with all of this? Because these are the elements of a research that we look into to understand this risk and whether this risk matches our investors' requirements. So if you need any further advice, guidance on your investment, please feel free to reach out to us. We are Happy Investor. We have about 650 families registered with us. As investors, we are managing more than 600 crores for these investors with us. And as a team of 10 people, we have a combined experience of 82 years with all employees certified as per the regulator. And we are one among 2,700 certified financial planners in the country. So this means you get advice, you get guidance to understand your money requirements in the short term, long term, medium term, and also understand risks that you carry and the insurance that is required. So do reach out to us. This is our happyinvestor.in is our website. To reach out at research@happyinvestor.in, or you could also write to us at info@happyinvestor.in. This is my number, 96200 96201, and we'll be happy to help you at any stage. So that's what we had for you today. I can take some questions if there is any that you need to. You can unmute yourself and ask the question.
Good morning. Good afternoon, Sujata.
Yes, Nitin.
Yeah, it was a fantastic presentation. Came to know a lot of details about it. Can you please explain once again the portfolio turnover term?
See, a fund picks equities and sells equities on a regular basis. So there is an average time that it takes to churn the whole portfolio.
Okay.
So that's what it means. It also gives you an indication of how long the fund holds an equity after picking it and how long it takes to kind of churn the whole portfolio of holdings. And that's this particular one was showing at about a year.
Okay. So turnover means both in the upside and the downside, is it?
I'm not talking about upside or downside. For
Okay.
example, scheme A picked up company A.
Okay.
It is in the January of the year.
Okay.
And over a period of time, they saw the kind of growth that they want to see. And then they feel, okay, I don't see any further growth in this happening at the same speed or at the same steam. So we will now exit. So they held
Okay.
They held the equities for 10 months.
Okay.
Then they sell it. Then the money that comes in goes into another equity.
Okay.
So that is the turnover.
Okay.
It's got nothing to do with the amount of money that's made or the amount of profit it's made. It is the timeline for which an equity is held in a particular scheme. And how long a particular scheme takes to buy and sell and churn its whole portfolio.
Okay. Thank you. Thank you so much.
Okay. Anybody else? Any further questions?
Hey, Sujata.
I
Just want to thank you about the session. It was a very quick one and good one. I really prefer these kind of sessions in the crunch of time. Thank you.
thank you so much. Any further questions?
Yeah, I'm Kumar from Chennai.
Yes.
Should be
Welcome.
portfolio allocation around 10% of each company, or recently I have seen in one of the fact sheet that it is exceeding more than 10%. Should it be the upper limit should be somewhere around 10% or?
The upper limit is 10% for a diversified equity portfolio. For example, the fund that I showed you was a large cap fund. Okay, so a large cap fund is classified as a diversified equity fund. So there is a upper limit of 10% to holding any particular company's equity. But there are certain correct type of funds which do not have to keep this. For example, if I'm investing in a sectoral fund, the classified fund as, it says it's a banking and financial services sector fund. So when you're classified as a sector fund, then you do not have to keep that 10%.
In that case, what should be the upper limit, or there is no limit at all?
Generally, there is no limit, but we as a mutual fund distributor, we try to understand that there shouldn't be too much of a concentration. Like I said, if it goes up to 20 or 30%, then that means that there is a high concentration in one basket. And then there's a higher risk for that. So these are the kind of guardrails that we keep when we try to evaluate whether this fund suits the purpose of our clients' investments or not.
Okay. Generally, there is no cap of the portfolio allocations. It depends upon the sectoral. It depends upon.
Yes, in sectoral there is no cap. In diversified equity, there is 100% cap of 10%.
Okay. Got it.
For
Thank you.
any particular equity.
Okay. Thank you. Thank you.
Thank you all for having attended our session today, and I hope it was enlightening and gave you a nice idea in terms of what you should look for if you are really interested in analyzing a mutual fund fact sheet. Of course, you are welcome to reach out to us for any other further queries. Like I said, I shared the contact details. You can always reach out to our email, at our website, or on our phone numbers, and we shall be happy to help you further. Do stay tuned in for our further updates. We shall share such short nuggets ongoing, possibly on a monthly basis, maybe more than once in a month. So thank you for sparing your time on Saturday, and wish you a nice weekend and a good festive season coming. Thank you so much. Take care.
Thank you.